In dairy farming today, staying on top of your numbers isn't just smart, it's essential. And that's why we are diving into the power of benchmarking for dairy farms with Curtis Gerrits and Jim Moriarty from Compeer Financial. From understanding your feed costs to evaluating labor and capital expenses, find out how analyzing data and comparing your farm's performance can reveal small opportunities that can make a big impact on your bottom line. All this and more here today on the Uplevel Dairy Podcast. Welcome to the Uplevel Dairy Podcast. This is the podcast for dairy producers and professionals who are committed to moving our industry forward. I'm Peggy Coffeen, and each week we bring you the leaders, the lessons, and real-world stories from the people who have built the dairy business we know today and those who are shaping its future. Join us on the journey by following Uplevel Dairy on Facebook, Instagram, and YouTube, and subscribe at upleveldairy.com to get new episodes and our Dairy Insights blogs right in your inbox. This episode is brought to you by Compeer Financial. Compeer Financial is a member-owned farm credit cooperative serving and supporting agriculture in rural America. Their dairy team brings world-class expertise and tailored solutions to support dairy producers' financial goals and lending needs. With our experts from the Compeer Dairy team here with us today, Curtis Gerrits and Jim Moriarty, welcome to the Uplevel Dairy Podcast.
Thanks. Good to be here.
So, Curtis and Jim, you're going to be taking the stage here at Dairy Strong Conference in Green Bay this afternoon and addressing the crowd with this topic on benchmarking. And so before we get into the what it is and how you're doing it to help dairy producers be more profitable, just take a minute and explain why, in your eyes as lenders, now is the time to really dial in on these details with benchmarking.
Yeah, I'll hit it first maybe.
Yep.
There's probably two things going on right now when you talk about time. So we're mid-January, so a lot of our dairy producers are pulling in their year-end financials. Their accountants are working on information, their consultants. So they're kind of wrapping everything up, not just from a tax season perspective, just to see how they do. So that information is about to become available, and they're going to be able to utilize that information to help benchmark and set themselves up for success for moving into 2026. So that's step number one. Step number two, we're coming into this year with some lower milk prices that we haven't seen in a little bit, which we shouldn't overreact to, but it's always a good planning, no matter what the milk prices are, to put together a good benchmark and a good business plan moving into the year, just to kind of see where you're at so that there's no surprises.
Yeah, absolutely. And Jim, what would you add?
Yeah, just to add on to that, we're in a different dynamic here over the last 2 or 3 years where we've had this beef on dairy revenue or additional beef income in. And to some extent, when milk prices were up, that beef income helped us maybe cover up some of our underlying operating expenses and things. So now is the time, hey, we can fine tune here as we go forward and, try to find, where those opportunities are to maybe tighten up a little bit. Not, again, as Curtis said, not overreacting to anything. And it's not about, when you go through an analytical process or a benchmarking, you're not going to find $1 a hundredweight but it's going to be a whole series of 10 and 20 cent little opportunities that you're going to try to pick up here just to help us get through this next 6 or 9 months of a little softness and get back down the road to, full opportunity.
And would you say that's really the power of benchmarking, is being able to find those extra cents to pick up because they add up in the bigger picture?
Yeah, they certainly do. And our producers have come such a long way over the last several years in being more sophisticated with their numbers. So like Jim alluded to, finding a nickel here, 2 cents there across the many categories that we deal with, both on the income and expense side of things, adds up to make a difference and move the needle.
Yeah. So when we talk about benchmarking from the Compeer Financial perspective, what does that look like?
Yeah, so basically benchmarking is you're just trying to find something to compare your current results to help you kind of identify both, where you're at today and, also kind of mark your progress over time. So the first step we always do with producers is, benchmark against yourself. How did this year stack up compared to last year and maybe an average of the previous 3 years? So, first you can benchmark internally against yourself and then try to find a data set out there. You could benchmark against another farm maybe that you know really well, but you probably want a bigger cross-section of, 20, 30, 40 farms that are kind of like size and operating approach. And then you can kind of get a good cross-section of what the industry looks like. And then as you go through, both on the revenue and the expense side, identify areas where you do really well, because you kind of want to make sure you're still emphasizing the points that you're strong at, in areas for opportunity. And that's where you can maybe kind of dial into, okay, how do I pick up in this area that maybe we're lagging a little bit?
And Curtis, could you add to that with an example of some places where, when you are able to look at those benchmarks from several dairies in a like size situation, kind of about as apples to apples as you're going to get, right? Where have you seen opportunities where that producer can gain and grow and find what maybe they're overpaying for, or where there's a difference or discrepancy between what they have in their numbers and what some of their peers might have?
Right. Yeah. So I was going to add to what Jim was saying is you've got the dairy producer using the benchmarks, and then for us at Compeer, from a lending perspective, what do we do with benchmarks as we're analyzing financials client by client? Now we treat every client is going to be different, right? Even if the benchmarking kind of points you in a path as to here's what is the norm, we also still have to understand is what is happening in that particular farm driveway. And I would say, though, one of the bigger things for us as we're reviewing those financials with our underwriting team is, as we put that year-end information together for that one particular client and we match that up against benchmarking and the other data out there, if we recognize there might be an area that is not normal compared to what we're seeing, it allows us to start asking questions with the producer to either help them understand or help us understand as to what is happening. Because, again, every dairy operation is different. And even if they are very similar size, 1,000 cows here and 1,000 cows there, there's many different operational differences that could sway those numbers. And you have to really understand that piece.
Yeah, and that allows you to have that individualization for the farm, but also the ability to look at kind of that cross-section of what's a baseline. Where have you seen a situation where, farm really was able to take something they learned from that benchmarking study and make a change that made a difference in their bottom line?
Yeah, so, the feed categories, it's the biggest category out there, so that's the one that probably has the biggest opportunity to make changes. And so when we provide the benchmark, we can kind of say, hey, your maybe your feed cost is running just a touch higher. It's out of line with others. We're not going to be the ones that are going to go in and help diagnose that, but working with the nutritionists on the farm, and a lot of times it comes down to where they can make changes between forage and concentrate. What kind of mix of things are we growing ourselves on the farm versus buying. And then obviously how that relates into the productivity, because that your best way sometimes to lower your feed cost per hundredweight is to get more out of the feed, So those probably are our biggest hitters. And then with some of the dairy consultants that we work out there, the emphasis on components, so we're clearly seeing that. And so sometimes we come back to a farm and, if we go back 5-6 years ago, 3.8 butterfat, a Holstein herd was really good. And so we come back and, hey, there's herds out there getting 4.4 now and still really high production. And it kind of, I got to dial in here a little bit and figure out how I can get up to that same level. So it's usually feed combined with the production is where we're seeing probably the biggest impacts that people are being able to make. All of a sudden now you're making a 50 cent or $100 hundredweight impact on your bottom line.
So going back to what you shared about feed, do you see more dairies as they look at those numbers that are looking at, okay, how can we utilize more homegrown feeds and forages right now? Or how can we maximize this to minimize expenses of what we might need to add in later? Is that an area that you see some shifting going on in?
Yeah, I think, we're everybody's pretty heavy corn silage diet. That's really your most economical feed source. But, here, and this is probably, again, more of a Wisconsin thing, we're seeing more alfalfa back into the ration. And in particular, when we're coming off really high purchase feed costs and in terms of, cow health and performance. So, and we're kind of piggybacking off of some of the nutritionists and consultants out there that are really emphasizing that. But I think that's been an area where some farms have been able to make real strides in their feed cost is by growing more. And, we do just such a more phenomenal job in putting up haylage anymore, where we can get up big volumes really fast. So we've got a higher quality feed source to begin with. But and then now there's some people starting to look at maybe some soybeans, high oil soybeans and things like that to try to add into that. But it's really maximizing our homegrown feeds and forages has been really at the forefront.
And again, I kind of playing off of what Jim was saying with our homegrown forages and homegrown feed all together, it's if we see something that's a little bit out of line and we can bring it up as a topic of conversation, it then boils down to, okay, is our feed efficiency okay? What's our refusal rates? What's our mixing time? You start to be able to diagnose not just necessarily the feed cost or the quality of the feed, but is there some infrastructural things that can move the needle a little bit in regards to that? Again, same with the soybeans out there.
We talk about homegrown and we're making it like it's, which is kind of here in the upper Midwest a little more, we grow it ourselves. But you can also accomplish the same objectives working with local farmers. If you're buying the feed, but you're kind of working in collaboration with them they're helping grow the forages and the feed you want, you can accomplish that same thing. So I didn't want to just say, hey, you got to own and produce your own crops yourself. You can do that with neighbors, and that kind of fits into the same category.
Yeah, and that's, again, goes back to the value of having these conversations, right? See where you're at and then strategize how to get to where you want to be. And when when we talk about benchmarking, are there some key and core numbers that you really dial in on with producers?
I'll bring up my two that I kind of look at. I think all of us as lenders and even dairy producers or nutritionists, you kind of have your favorite benchmark areas yourself as to, okay, this is going to really help set the stage. One thing that we didn't really talk much about yet, it's really easy to talk about the operational side, feed, labor, utilities, things of that nature. But one thing that kind of gets overlooked a little bit is our capital cost. So it's a true cost number, and it's hard to change that overnight because usually that capital cost is associated with the infrastructure that is designed around your whole entire business. So you can't say, well, I'm going to decrease this by 50 cents. Well, that means you're probably deploying some of your assets and having to then go to a different expense area to help fill that void. If we can be under that $3, $2.50 a hundredweight under capital cost, that really helps a producer kind of establish that bottom line. Again, that needle, it's hard to swing that needle. It takes time to move that capital cost needle. So that's definitely one of them. We talked a little bit about labor before, but labor is another one that usually raises a question or brings up some topics of discussion. We've been seeing that number become much more narrow. And again, it's kind of understanding, though, what the business is. Yep. Do they have all their own equipment? Are they growing all their own forages, raising their own heifers? Their labor cost per hundredweight is going to be higher versus the dairy farmer that buys all of their feed, doesn't run land, doesn't do their own manure hauling, doesn't raise their own heifers. It's going to be a little bit different. Kind of a very similar number to capital cost. And that number, there's one number on an income statement that will go up year over year, and that is labor. It's the nature of the beast. But if, again, kind of very similar thing, if we're under $2.50 a hundredweight, we're feeling really comfortable about that. And that higher milk production is helping keep that number at bay, per se.
Mm.
Yeah. And you'll see, labor costs maybe be higher in some instances, again, as Curtis mentioned, where you're raising all your own feed, maybe doing some of your harvesting, raising your own heifers, that'll be a little higher. But we tend to look at, how the capital costs and labor costs are relating to each other. Because when you're making investments, large scale investments, you're hoping to get some labor efficiency out of it and some more productivity. So it's, there'll be periods of time when you make a large investment back in your operations, your capital cost might go up to $350 for a while, right after you made that big investment. And you're hoping over time, maybe you're bringing a 25 or 30 cents off of your labor costs because you're just being more productive. We need to be competitive and pay well for the team members that are working with us, but we want them to be able to be as efficient and productive as they can be. So those two tend to, kind of work together. And then those from lender standpoint, the capital cost is really our kind of wheelhouse, if you will. The other one here in the recent years is really on your what we call net herd replacement cost. But it's an area where dairy farmers and other farmers we work with have made a tremendous amount of progress. Because if we go back 5 to 8 years ago, you had as many heifers as you had cows, and now we're down to where, because we're doing much better job in the management with our dairy herd, our turnover rates come down, where we used to be 35 or 40% herd turnover a year, now we're 25 to 28%, and we're raising that much less heifers. So we maybe got 75% a heifer herd to our dairy herd. So the deal is we're selling more beef calves, and we're having to invest less dollars in our overall heifer program. And that's driven a lot of profitability and cash flow. Even where we've seen milk prices soften, the cash flows are probably still been, favorable out there, just because of those dynamics with the beef and lower heifer inventories, but still maintaining a very highly productive herd.
So thank you for sharing those key numbers that you look at and that you really drill down on with the producers in your benchmarking groups. Can you just also elaborate too on utilizing this information, right? Because numbers are great. We have data points from every part of the cow, inside and out these days, and so many metrics on the farm. So maybe just speak to using the data, and also how that fits in with not just yourselves when you're at that boardroom table for those quarterly financial meetings and year-end meetings, but also for other members of the advisory team.
Yeah, it's a really good point, because it's one thing to put all of the numbers together and you have it in front of you. It's not just checking a box to say, hey, I did it. Now I'm going to go back to feeding my cows and milking my cows. That's not my dad told me that my grandpa always said, hey, Brian, my dad, as long as you work hard, you'll be fine. Well, that's not the case anymore, right? It's not been the case for a long time. So I would say consistency is key. Reviewing that information, the benchmark stuff, and your business plan on a regular cadence. Maybe it's not monthly. Maybe it is. Some farms certainly do it monthly. But I would say at a minimum, probably quarterly. See how we're doing against our benchmarks, and then understand the reasoning why something is maybe deviated off the path, right? And again, everybody's going to be different in that regard. So between that, and then also having a consistent data set that you understand how those numbers were arrived at, and especially probably the one thing that we, as an industry, we're getting better at, but we continue to deviate a little bit, is just the categorization of both income and expenses, more so on the expense side of things. Chemical and fertilizer seems to be one that gets mixed up a little bit. Custom hire versus labor is another one that sometimes gets a little bit skewed. So if you can have consistent information and you understand how you put your information together, will really drive you forward to having a profitable business year over year, no matter what the milk price is.
Yeah. So they have to be the numbers that matter to you.
100%.
Yeah.
And Jim, what would you say?
Well, and just again, kind of a best practice we see out there is, have a chart of accounts with the detail that help you, and I do, we do, my brother and nephew grain farm, and I do the books, and then it's a lot less encompassing than a dairy farm, but it's like, well, how did they do that last year, but if you have it documented so that you're consistent, and as Curtis said, where you're documenting, and then also when you also want to ask, whatever benchmark data set you're comparing to, how are they doing it, so that you can be, consistent when you're, putting those together. So, that just leads to the consistency and reliability of the data. Now, one of the frustrations people have with the benchmarking is that there's always a little lag before the database becomes available. So, and we get that. But, most of the farms will probably have their year-end financials kind of fully vetted out and reconciled before the end of the month, but it might be another couple of months before you have that benchmark. Now, you can do an initial, hey, I'll look at, you can get benchmarks that maybe are September 30th. They don't give you a kind of a comparison until you get that full year-end. But again, you're going to, go through and just, line by line, and maybe pick out the biggest lines, where's the variance and how does that lead into an action plan? I mean, because at the end of the day is what are we going to do with this information? And so when we identify, hey, I think this is an area we can improve on, then, okay, what are those steps we can take and employ on the farm? And so I know it's frustrating that, hey, you might have to wait till April or May before I get that benchmark to look back at, but it's kind of a continual process, So when you get the opportunity to look, do your pulse check of where we're at, and then fine tune where you want to go and what you want to focus on.
Yeah, and as you said, the most important step then is the action plan and taking all of that information and making it meaningful every day on the farm. And so the two of you are, like I mentioned before, taking the stage here at Dairy Strong to present on this topic. What is the one key takeaway that you want to leave those listeners with and that you want to leave our listeners with today on this topic?
Yeah, I'll go first.
Yep.
Embrace it. And I mentioned before, our dairy industry, dairy production industry as a whole has gotten much better in managing their business, not just the herd and the feed, but the financial business side of things. And so if there's anything that I can leave with is set up a plan, be consistent, and embrace it and use it. That's hands down the producers that I work with that can come to me and go, hey, Curtis, here is my numbers. Here's what I understand. And based on this, can I request a loan for X, Y, and Z? It really means a lot both to myself and our underwriting team that the numbers are there, they understand what they're asking for, and we can go ahead and underwrite and process it because they've embraced it.
So those numbers are power when it comes to having the conversations with you.
Absolutely.
and underwriting as well. What would you add, Jim? What's the big take?
I think there's a tendency when we're in, our milk prices are maybe down a little bit that we're going to retrench and, hey, we're just not going to do anything. And really it's an opportunity to, hey, where can we focus? And, it's hard to say be optimistic about it, but it is in terms of how do we use this opportunity to tighten up a little bit and still be prepared because we'll get through this cycle and there's going to be other opportunities. So, we're going to focus today in the discussion about, how do we, try to fine tune some categories, but we really want to do that in a way that still positions us for, continued success and what that next thing is that we want to do. And don't be afraid to continue to move forward even when we're in a period of lower milk prices.
And so that sums up our benchmarking conversation for today. And while I have the two of you here, I'm going to challenge you with one more final thought and final takeaway. I want you to think for a moment about the 2 or 3 most profitable dairies in your portfolio. So picture them in your mind. What are they doing differently than the rest? So if they're in the top 10%, what are they doing differently than the other 90?
It just really comes down to attention to detail. I mean, it is, it's one that comes to mind, one of the highest profit herds and operations that I work with. And it is, it's a 2,000 plus cow dairy. And, we met with him and he had his herd management manager there. And, I think if we just kind of dial in some of our flows, we can get another 100 cows in the dairy on the same footprint, the same labor. And it was just in terms of how they were just kind of reconfiguring things a little bit. And it's that and it doesn't have to be adding more cows, but it's just kind of, we tend to think about new dairy and new buildings, but sometimes it's about, just how do we continue to maximize off of what we do. And again, it's attention to detail, execution each day, and just kind of that continued focus. And that just seems like they just continue to do well no matter what.
And how about you, Curtis?
It's I get asked all the time, do we need to get bigger to be more profitable? And what has proven to me and our team time over time is size doesn't necessarily matter. Does it make some efficiencies in certain areas? It certainly does. One dairy family that sits with me that would be in my top 10% is 700 cows. They are so passionate about their operation. Every family member is involved. They're all making decisions. They meet on a regular basis. And a couple of years ago, they hired a consultant to help put some numbers together. So they also raised some of their own beef as well. They didn't know if it was making them money or not. It's just something that they had always done. When it all came to fruition, it was a very profitable enterprise for them. But they just didn't have that information separated out. It was kind of all under one umbrella. So that particular farm, it's the family labor matters. They really pay attention to what they're doing with their herd, their cow comfort, production per cow. They've really spent a lot of time in that area. And then when I say embrace, and I'm probably bring that word up so many darn times, they decided to embrace their financials, and they're 700 cows. They don't have to be 3,000 cows, and it is working very well for their family.
Yeah, it reminded me, you asked about how do you incorporate advisors in, and that can be family too. And I would say those top performing herds, when we're out there and maybe with the advisor, the nutritionists and stuff, they're willing to share their financial results. Maybe it's not the whole income statement. It's selected with their herd manager, the key people on the farm. And if you bring everybody in and allow everybody to have a part of the dairy and the farm's success, that's a kind of a key to help moving forward. And we're seeing that more and more where, in the past, sometimes we're going to guard that data. And I think more of those top performing farms are bringing the family in and their key people and be willing to share more detail on their financial performance. And then everybody's kind of then motivated to help keep the farm moving forward.
And so if I were to summarize what I'm hearing from the two of you, there's this embracing and deciding to really take hold of your financial picture on a regular basis, bring others around the table to look at that.
Yeah.
But the other two things that you shared was that attention to detail and focusing, and just really keeping that focus on where you're going and how you're going to get there. And Jim and Curtis, you're two of the guys that are out there doing it with dairy farmers every single day through your work with Compeer Financial. Anything else you want to add to this conversation?
We just appreciate you having us, and we're an open book. So if anybody ever has any questions, reach out. We're happy to share.
Yeah, no, we appreciate the conversation. This has been good.
Yes, and as always, there's links in the show notes to connect with the dairy team at Compeer Financial, to Curtis, and to Jim, and to others that are out there supporting dairy farmers and helping them to be profitable and successful and to keep moving forward. So thank you for joining me today.
Yeah, thanks, Peggy.
Thank you.
Thank you for listening to the Uplevel Dairy Podcast. If you enjoyed today's conversation, make sure to follow the show, share this episode with your friends in the dairy community, and leave a review. At Uplevel Dairy, we are here to highlight the leaders, the lessons, and the real-world experiences that are shaping the future of our dairy industry. Find more by following us on YouTube, Facebook, and Instagram for behind-the-scenes content and upcoming guests. And subscribe at upleveldairy.com to get new episodes and our Dairy Insights blogs right in your inbox. I'm Peggy Coffeen, and until next time, keep on learning, keep on leading, and keep up-leveling your dairy.